Hello, my name is Victor Kinon, and I'm a partner at the law firm of Scarinci Hollenbeck in Lyndhurst, New Jersey. And I'm also the chairman of the transactional section of that firm. And today we're here to talk about private placement and the ability of small firms to find money in this market. In the year 2000, 40% of the initial public offerings in the world occurred here in the United States of America. Today, the USA is a source of less than 5% of the world's IPOs. The disappearance of most of the small and many of the large brokerage firms in this country has reduced the availability of public capital markets to smaller companies. Facebook's creative use of the private funding market is evidence of the demise of the IPO market, now replaced by private funding. The continuing economic crisis has had a devastating effect, drying up many of the equity funding opportunities. While there are many private sources, such as investment funds and hedge funds, seeking to invest their capital, finding those sources has become a challenge, and the terms offered are far more onerous than valuations formerly offered for IPOs. The disappearance of most of the smaller brokerage firms, where the prime sources of capital formation for small to mid-sized businesses, has led to a rupture in the American capital formation industry that government and regulators have been unable to repair. This has led smaller businesses to search for capital more directly, through personal and business contacts, often referred to as friends and family rounds. These are usually relatively small raises of several $100,000 to as much as several $1 million. While the business owners making the offering are usually well-meaning, after all, they are literally approaching friends and family. If you are approached for funding in a friends and family financing, you should have fair warning to be on guard for the warning signs of bad investments. There are 5 red flags that a private placement is a poor investment choice. First, lack of formal documents that include a private placement memorandum that accurately and in the proper format and detail, in well-written, understandable, plain English, provides all the information that a reasonable investor would require. This includes a detailed description of management's business and educational backgrounds, the capital structure of the company, a description of the business, its markets, principal customers, financial statements, and a number of other items of material importance, such as litigation, regulatory issues, employees and unions, intellectual property, material contracts, and not to be taken lightly, a substantial description in detail of the risks of the investment. Next, in reporting its financial history, you should be provided with properly and professionally prepared financial statements of the company, preferably audited by a reputable, independent accounting firm. While the inclusion of certified financial statements from an independent auditor is not a requirement of private placements offered only to accredited investors, if the offer is made to any investor who is not a millionaire or a person with a current history of earnings of more than $250,000 a year, the failure to have audited financial statements and a private placement memorandum in the form of a prospectus would, in most instances, be in violation of applicable laws and rules. Third, inexperienced management with an unrealistic valuation of its business, so that you are paying too high a price for too small an equity piece in the business. Fourth, lack of an exit strategy. How does management propose that you reap the benefits of your investment? There is a problem if there is no clear endgame strategy, such as sale to or merger with an industry leader, a reverse merger into a publicly traded entity, a feasible plan for dividend payments with a right to put your shares back to the company, be paid a calculable value based on a formula related to the success of the business over time. Fifth, vague or inarticulate presentation of any of the above, or worse, finding that a material fact or credentials have been misstated through a simple check as a Google search. There are many virtues of friends and family round of private placements. In keeping with the oft-times close personal relationships, such offerings often include high-interest yielding convertible debt, collateral, or personal guarantees that would not ordinarily be available for other investments. In the absence of a red flag, the investment proposal that your friend, cousin, neighbor, or brother-in-law offers you and others to participate in the growth of his or her business may indeed be a risk worth taking. This is a route more small businesses are using today to fill the void created by the absence of bank lending and the death of the American small business capital markets. And remember, if something seems too good to be true, it usually is.